Is this the bottom for China and Hong Kong equities? Headline reads, Hong Kong stocks lock best week in 6 months on Beijing's goodwill gestures as JD.com, NetEase, Alibaba jump 10%. I sure hope so, because despite avoiding it purposefully in 2021, escaping a 42% decline, I've actually picked up Chinese equities as of 2022. However, I was still hit with a 20 to 30% further down leg. So all in all, it's been a very humbling year. And even for portfolios I manage, I can't put that much in Chinese equities now and instead put more towards Asia, whereby there's some diversification towards other regions such as India. So as in case you haven't seen, India's Sensex is right now still at all-time high. An example of an Asian fund would be this, FSSA Dividend Advantage. Not an investment recommendation, it's just that a diversified approach has China, Hong Kong, as well as some other regions in Asia. Top holdings include HDFC, which is one of the largest banks in India, TSMC and Tencent. If we see the 10-year performance of such a fund, it looks pretty good, and at least in the near term, being diversified has saved it from massive downturns. But today, we're likely here to discuss why Chinese equities are cheap, correct, and why it may have bottomed. So what's the whole idea of diversifying? When I manage portfolios, there's certain near-term performance expectations. It's not so easy to be a deep contrarian. But for today, I'll be showing you my China-focused allocations, just in case you have a deeper risk appetite. And stay right to the very end because there is a surprise for you. With that, let's roll in the intro video. Hi guys, welcome back. Without further ado, let me show you my two portfolios that I've shared before. The first is one that I've done dollar cost averaging for 50 weeks back in 2022. That 1,000 per week was buying throughout the year, and it completed its purchase, investing a total of 50,000 for me. At one point in January this year, it was actually positive, but right now, it's back now minus $6,700, which equates to about a 15% decline. The second portfolio is one that I've done dollar cost averaging for 10 weeks of $2,000 and 3 times of $10,000. Total investment into that, also 50,000. And as you can see, there's also right now in the red. So all in all, even though the portfolios have declined, I'm still holding on. So as you can see, I'm pretty damn stubborn about it. And just in case you are also investing in Chinese equities, I think we can all find a bit of comfort knowing that this journey is not experienced by us alone. Everybody into Chinese stocks are still waiting for daylight. Naysayers will definitely say China is uninvestable, Tesla is better, Nvidia is better. Maybe they are right because these are after all great companies, but their growth expectations are also sky high. With that, let me quote from Howard Marks. It's not what you buy, it's what you pay for it that determines whether something is a good investment. Right now, Chinese equities are rock bottom, in my opinion at least. So we have to ask ourselves this question. Will Chinese equities be around for the next 5 to 10 years or not? Will they turn to dust? Without focusing on too much of recent share price, are these, Tencent, Alibaba, Baidu, also great companies? If the answer is yes, quite possibly it's a function of waiting for this bear market to finally die. Because if you see in terms of Tencent, prices are far depressed from its peak, trading right now around $350. Tencent has definitely outperformed Alibaba, which has seen even deeper corrections. Take note again, Alibaba once topped $300, everything was rosy and Goldilocks back then, and right now it sits at 92 Hong Kong dollars only. And if you don't buy individual Chinese stocks, you can always look for ETFs that are focused in this sector. Two in particular to share with you. The first is Invesco China Technology, which is actually CQQQ. Just in case you don't know, CQQQ does not have Alibaba within its top 10 holdings. Number 1 holding is Tencent, it's true. But second on the list is Meituan and third Baidu. But if you want Alibaba, it's not found within this ETF. You may have to look for KWeb, which has Tencent also as top holding, but second is Alibaba. Both of them hold 9+% in terms of net percentage of assets. Meituan is third, Pinduoduo is fourth, and Baidu is fifth on this list. What we can observe is both of them have trended roughly the same direction, right? So what will outperform in the next 1 or 2 months, nobody knows for sure. But once sentiment turns more bullish for Chinese equities, I think both of them will start to perform for you if you are an investor within them. So let's look at the journey for CQQQ. Back then at the start of 2022, there seemed to be a near-term bottom. Then markets actually recovered slightly and then went down a further leg. Take note again, this was when Xi Jinping was re-nominated for his new term. Sentiment just crashed right to the bottom, and hopefully that is the very, very bottom in October 2022. There was a recovery with China's reopening, and some feel this looks like an inverted head and shoulders bottom, which signifies a bottoming of market. Personally, I think it's not conclusive. because the rally up is not yet observed. It's kind of flattish, correct, over the last few months. Take note again, this is not investment advice, but what I'd like to share with you is what I've done for myself. If you see what's inside my SYFE portfolios, on the bottom left, you will actually see a third portfolio that was buying into CQQQ. Let me give you a glimpse inside it. I actually made this purchase as of December 2022. And right now this portfolio is negative $468 as you can see over here, further inflating my total losses in Chinese equities. But the curious part is how come the losses are only that narrow? What I actually did was $5,000 per week for 5 weeks and the total invested capital was actually $25,000. Back in January this was looking pretty good, with some gains finally. And what I did then was to actually lock in some of those gains, selling out 10,000 of it. That's why the graph actually went downwards over here. As you can see on 7 January, there is still a 2,000 plus gain. But this has been quietly eroded by Mr. Market. Very painful, correct? So if you're always this question, Josh, are you still holding your Chinese portfolios? I am still. I'm very stubborn on that. And in fact, I've added slightly more even. Maybe I'm stubborn or maybe I'm patient. But do subscribe because I've actually cut losses on something else instead. I'm staying invested, but I've moved on from one REIT to reinvest into a different REIT. Give me some time, I'll prepare the materials up and build that case to share with you my thought process. So if you're curious, smash the subscribe button. I will give you some insights as to the moves I've made. And with that, I'd like to leave you with this particular quote by Warren Buffett. He's mentioned that Mr. Market, at times, he feels euphoric and can see only the favorable factors affecting the business. Think back on Chinese equities in 2021. Right now the limelight is shining on AI companies and everybody in that sector. When in that mood, he names a very high buy price because he fears that you will snap up his interest and rob him of imminent gains. At other times, he is depressed and can see nothing but trouble ahead for both the business and the world. Nobody thinks very highly of the Chinese economy right now. Maybe they are over depressed. On these occasions, he'll name you a very low price, since he's terrified that you will unload your interest on him. Alibaba was $1 trillion, right now it's at 92 only. Mr. Market has another endearing characteristic. He doesn't mind being ignored. If his quotation is uninteresting to you today, he will be back with a new one tomorrow. Under these conditions, the more manic depressive his behavior is, the better for you. Hopefully you remember this wisdom, and if you're also looking to do deep value investing, I think Chinese equities are worth a look. I dare not say that it's the bottom anymore after getting burned. And hopefully we can all ride out the sunshine together. And if you agree, smash the like button as always. With that, I'll sign off from here and introduce you to some of my previous tutorials discussing on Chinese equities, as well as what I'll share for new investors. If you haven't seen these tutorials, check them out because it can help you in your journey also. With that, I'll sign off from here. See you there. Take care and goodbye.